Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
If you're in the mood for the mean, witty, cunning and downright just the most vicious stock-picking show on television, you're tuned into the right channel. This is CNBC Africa, first in business worldwide. It's Share Shootout League, and I am Bruce Whitfield. Now, did the former PPC chief executive Ketso Gordon resign because he couldn't cement his place on the board? Or would you ever sign a nuclear deal if the Eiffel Tower lights weren't working? And how come all the Share Shootout League players relate Eiffel Tower jokes? I don't know the answers to any of these questions, and neither do you. They're incredibly puzzling. What we do know for sure, though, is that the numbers don't lie. Twitter has given us another winner. Bucks coming through with a rather crude tweet of himself. Don't, and then he uses a really dirty word, which essentially means don't mess with the Bucks. Vote for me on Share Shootout League and please retweet. It's shameless, but that's what it's all about. We have no standards here on Share Shootout League. Sasha's lack of, I don't know, any sense of decency. It's his education, you see. You don't understand. But it earned him 3 points, and that's all he cares about. Have a look at the league at the moment. Running Dog on 12, Nick the Value Guy on 12, and Bucks on 12. That is the leaderboard. Chris the Scots kilt has paid off for him as well. He's on 9, Maverick on 6 points, and bringing up the rear. Somebody always has to bring up the rear, of course, is one of tonight's contestants. Will he go from 3 to 6? Nao the 1 at the bottom of the list with Chi-Town, the Good Guy, and K Live. That's what it looks like on the leaderboard. It's a little bit like a golf score, really, except here you have to lie, steal, dress up, do whatever you like. But whatever it takes to win, you have to do it. Let's introduce tonight's players, because that is what it's all about, of course. You're the decider, a bit like George W. Bush. Nobody wants to admit to it, but secretly you'd love to have that little red button. You decide who in the fight against tonight, who to win and who will go. Take to the Twitter streets, and while you're at it, you decide the winner of the Share Shootout League. You follow at SSO League and you tweet any of the stock pickers' hashtags. It's as easy, I don't know, as a nuclear deal. Actually, even simpler than a nuclear deal. Back to tonight's match, and even though he is tied in first place, our first stock picker knows with 3 matches to go, it's still anyone's game. Our second stock picker is on a hot winning streak of 1. I'll give you the players, ladies and gentlemen.
Nick Norman-Smith, Chief Investment Officer of Lentus Asset Management. Follow a value investing approach here at Lentus. We generally are quite contrarian, so looking for areas of the market that people are really hate and are nervous of, and that's where we believe we can find the opportunities. I think it's about finding some stocks that the audience really like, exciting, and try and spice things up a bit and not just have the boring old favourites. I think Bruce Whitfield is definitely going to be the biggest troublemaker on the show. Yeah, absolutely. One must be positive. I think it's going to be a tough competition, so for sure.
Kgantsi, Portfolio Manager at Nedbank Private Wealth. We are a valuations-driven house that aims to create wealth for our clients on a need-based basis, especially those who take a 3 to 5 years view on the market. I will try to, show my knowledge of the markets, keep to speed, with companies and also with my competitors, and also try to make sure that I stack up to the competition. Christopher Gilmore from Absa Wealth. I think so, because I've been in the game for some time, and my knowledge of the markets and companies is very sound, so I think that I stand a very good chance.
Now, both Nick Norman-Smith, the value guy from Lentus Asset Management, and Neo Kgantsi, the 1 from Nedbank Private Wealth, are on an upward trajectory on the league, albeit at very different ends of the league. The 1 is at the bottom of the league, and value guy could be the first to secure 15 points to go to the lead. So, gentlemen, who wants it more? Who is hungrier? Who desires? Who wants to win?
Ladies first.
Okay, there we go. He's already fighting. Nick, I'm impressed. Congratulations. You're on 12 points. You're in the top 3 so far. You could really upset Sasha Narishkin and also, of course, the enormous Gary Boyson if you do win tonight and take yourself up to 15 points. But nobody will like you very much because now needs 6. So you choose. Who do you want to upset the guys more? Do you want to be liked?
I think self-preservation.
There we go. Self-preservation is what it's all about. The oldest computer company in the world is one that you still like. I'm surprised these guys are still in business. In the modern day of computing, it's all disposable. But IBM, International Business Machines, is still going strong. In 30 seconds, why do you like them?
we think of it as a hardware company, but this business actually makes half of its money from software and the other half from services and outsourcing. So it's transitioned massively from a boring, dull hardware manufacturer to a service provider. So it runs IT departments. It provides the hardware, but then it provides the software, the people, it runs it. It also does business process outsourcing for a lot of clients. So it's a sticky business. Once you're in there, people are unlikely to get rid of you. So high pricing power, cash generative, and this business is trading at 10 times earnings at the moment. So wonderful business. And really has changed over the years.
In South African parlance, it's the discovery of computing. In other words, it gets into your life and then you can't extricate
as much as you hate them,
you can't extricate yourself from them. Okay, IBM, great business model. Is it good enough for the neo?
Not good enough for me, because I think that there is a lot of disruptors at the moment, into the sector, who are coming up with interesting technologies, interesting softwares. That market is very competitive, and I don't see, how in the current market IBM is going to match, the technology that has been developed.
But they are beyond technology. It's about services. It's about taking what you've got and then becoming integral to the lives of your customers in a way that they can no longer live without you.
Well, everyone is trying to do that. Google is doing that, Samsung is doing that.
What's the difference with IBM?
The beauty is with IBM is they're actually a kind of platform. Okay, so yes, there's a new piece of software that someone wants to use. You plug it in, and the IBM software is what's called middleware. It pulls it all together. So, for example, FNB's wonderful app, okay, that runs on an IBM server, and it's got IBM software which then pulls all the info from the various parts of the bank. So probably 20, 30-year-old software at one point and some other new software in the mortgage loan department somewhere else, and pulls it all together. So all these great new competitive software that comes out, all they do is IBM plugs them in and they remain with the customer.
You notice he said the nice FNB app, he didn't say the nice Nedbank app. I just thought I'd point that out. But you got to shoot him down, not because he was rude about FNB, about Nedbank. You're shooting him down because you don't like the IBM
Shooting down
business.
right away.
Okay, you're shot down. I like your story. I don't know anything about IBM, but I like your story. Well told. Nick Norman-Smith from Lentus Asset Management. Neo Kgantsi from Nedbank Private Wealth. His second favorite banking app. Do you have a banking app?
I've got.
There we go. Just checking. Here's a brave one. You are feeling courageous this evening. Interesting. Captain Courage. In 30 seconds, tell me why you like Exxaro.
Well, simply because 75% of their coal earnings are coming from contract rather than being exposed to spot prices, and they've got good coal reserves in the Grootegeluk region, where basically they are taking all their production to Eskom, and they are able to get cost recoveries, nice margin, as well as economic profit. And they are also having 44% exposure to Tronox in the US, where basically that business can be up for acquisition anytime soon. The business is doing very well.
Okay. I mean, this is a big bet against the secret deal between President Jacob Zuma and Vladimir Putin. They want to nuke us, or have us nuked for electricity in the next 10 years. Is coal really the place to be anymore?
Well, I think so, simply because nuclear technology, it's true that the future is in renewable energy as well as nuclear, but the cost implications are very huge. And at the moment, I think that coal will still have its space, in the energy mix.
Does coal have a space, or is it too dirty for you?
We shouldn't even be talking about coal. Iron ore. That's where they've made most of their money in the last few years.
And what's up to the iron ore price?
The iron ore price has tanked, as we've all been worried about for a long time. Supply demand, it's a terrible commodity.
It's gone from about $120 a ton to below 80 in a matter of months.
And quite frankly, on a fundamental basis, it's unlikely to rocket anytime soon, because we've seen a massive amount of supply coming onto the market. When Anglos eventually get their Minas Rio project up and running, that's another massive amount of supply going onto the market. So you're going to see the people who've got the really cheap supply continuing to supply the market, which means...
Can Exxaro make money at $50 a ton for iron ore?
Look, at the moment, I think they have exposure to high quality ore, lumpy one, where basically the iron content is about 64%. And, the prices, at that level is about $80 a ton. It's true that iron ore is under pressure, but what is not telling you is that they only have 20% exposure, because the other 80% of Sishen Iron Ore Company, is owned by Global Iron Ore.
But how much of their bottom line over the last few years has been from iron ore? Should be called Exxaro line, or not Exxaro
because of underperformance of iron ore, it has become a lesser and lesser contributor towards their bottom line. And I think this is basically as low as it can get. Do you see iron ore going to $60 a ton?
I wouldn't be surprised. It's a commodity I'm still very scared of. I mean, I'm clearly not as scared given how much the share prices have been hit, but I think there are a lot better spaces. Plus, the capital allocation hasn't been great. I mean, the money that they lost in that Congo deal, going into Africa, not securing rights to get them to the port, for me, that's just unforgivable.
Was careless.
Very, very careless.
I think you're being shot down. I think you're being shot down. We could carry on, but you're being shot down. Let's end the pain right now. Shoot him down.
Yes, he's shot down.
He's shot down. Righto. Then, Nick Norman-Smith, let's go back to you. This is interesting because you're taking a bit of a gamble in this market. I thought this company had seen the worst of the big sell-off. It's seen a big sell-off. The chief executive quit in April this year with lots of fanfare and heroics. Then the profit warning came out. Then the next profit warning came out. And then the results came out. And the share price of Massmart has gone not into free fall, but certainly it has pulled back very, very significantly in recent months. But you still want to short Massmart. In 30 seconds, tell me why.
It's just gone from being ludicrously expensive to very expensive. So it's trading at well north of over 20 times earnings, and those earnings are going to be down, I think, 25%. So I'm talking about the end of last year's earnings. So this is a business priced for growth, priced as a premium share, yet its earnings are going the other way, in a very competitive environment, which is just going to get more difficult as more space and more retail competition comes in. So bad environment, priced for growth, and earnings have been stagnant for a number of years. It's just a very bad combination.
There we go. A horrible share, horrible, and nice business, nice place to go and buy your booze for the weekend.
Absolutely.
But you don't want to own the shares. Shorting Massmart, are you that brave? No, you like a good short from time to time?
Well, I agree with him. Personally, I don't like the company because I don't see the scope for growth. I think after that deal,
what about the Pan-African growth story, the Walmart story that we were sold at the time of the deal?
Look, if you want Pan-African story, you can get it via, ShopRite. I mean, it touched a high at 210 at a certain point, and I think at the moment it's flirting with 130, and that is where we see growth, because they are sitting on a cash pile of 8 billion, and over the next 5 years they will be putting 163 new stores. We cannot say the same thing, about Massmart. I think, they are very late into their African expansion, and frankly, I don't see growth for them.
And Walmart doesn't have a great history of global expansion. It's done brilliantly in the States, but it hasn't proved itself overseas yet.
I think Asda is struggling a bit, isn't it?
Yeah, Asda's struggling. Their South American business is struggling. So it's very difficult to export retail models into foreign markets. No one really has proved it globally on that sort of front.
There we go. You're taking it now.
I'm taking it.
There we go. Your short on Massmart is taken. Will he regret accepting your short? I wonder, because an interesting pick comes up in round number 2 when you go into your next pick there, Nick Norman-Smith. Right, you're also going into the shorting game now, Kgantsi, this evening. Tell me why. Is it the name of the company that offends you so much, or is it simply the business model? In 30 seconds, Assore.
Assore. Over the next 3 years, I see earnings falling 27%, then 20%, then 36%, a CAGR of 28% in 3 years. And with the fall in earnings, I also see dividends falling by 13% over the next 3 years. The reason is because iron ore is under pressure, and remember, unlike Kumba, they are producing low quality ore, and then their chrome business, is very insignificant, even though it's making profits. But their manganese business is also, under pressure, and I don't see, how they're going to end.
Is he a bit schizo this evening? What is my sense of this? So, Nick, because here, on one hand, he loves iron ore in Exxaro, on the other hand, he hates iron ore in Assore.
No, it's two different qualities. You can only start mining iron ore commercially with an iron content at 30%. Kumba's ore has got 64% ore. It's the best quality in the world and the lowest, cost producer. Okay. Whereas, Assore is sitting on the opposite front.
Oh, right. One is bad, the other is terrible.
But he was a short Assore. Yeah. It's one that you would, I'm sure, support.
Yeah, I do agree. There's so much negative news that we certainly had a look at it and said, well, everyone hates this business so much, there's often an opportunity. But I just looked at what it's done over the years, and yeah, it's not the kind of quality business. And being at the lower end of a commodity in a commodity slump is tough. I'd always go for the higher quality business, provided you can get it at the right price. That can at least see out the slump a little bit better. So yeah, I'd have to agree.
Okay, so you're accepting the short then on Assore. Now, Kgantsi, you've got one. Nick Norman-Smith, you've got one. As we go into the final break, of course, we'll do this in just a moment. Let me tell you what they've chosen so far this evening. We've got Nick Norman-Smith going long on IBM. It's a little too oldie-worldy, though, for Neo Kgantsi, who has shot it down in flames. But the short on Massmart, gratefully accepted by Neo. He thinks it's a lousy business, and he believes that ShopRite is offering far better value at the moment, especially if you buy the Pan-African story. Walmart just hasn't been sufficiently successful in its global expansion to satisfy either Nick Norman-Smith or Neo Kgantsi this evening. Then Neo from Nedbank Private Wealth, Exxaro going long on that. High quality iron ore reserves, he says. Nick Norman-Smith's not buying it, and he certainly is going to accept the short on Assore at the opposite end of the iron ore spectrum. We're going to be back in just a moment. What you need to do right now is follow at SSO League if you've not done so already, and tweet a hashtag, either hashtag #TheOne, which is Neo Kgantsi, or hashtag #ValueGuy. That's Nick Norman-Smith. See you in just a moment as we get to the final stock picks. This is CNBC Africa. You're watching Share Shootout League, the only league in the world where we have teams of one person only. Remember, this is match day number 24. We're edging closer and closer and closer and ever closer to the semi-finals. Your votes can change the evening and the lives of one of our stock, okay, maybe just the evening of one of our stock pickers. Follow at SSO League and vote for either hashtag #ValueGuy or hashtag #TheOne. They've chosen their shares this evening. We go into the next round. As we go now, Kgantsi, you go first on a share he's going to shoot down based on valuation because he has no imagination, he has no soul, he has no vision for the greatness of the global expansion of the most successful drugs maker in South Africa, because it is expensive. Why do you like Aspen in 30 seconds?
Simply because, I expect that there will be more bolt-on acquisitions going forward. They've made huge successes, over the last 10 years, acquiring a number of companies around the world. And I see, margins, bottoming out, from the lowest, of 2014, around 24%, because this is a company that has operated with margins north of 30%. Then I also see them rationalizing the business and also trying, to exit low-margin businesses in favor, of good margin business in under-penetrated areas of the world. They've got a good balance sheet.
There we go. And he even stops on time. He deserves 2 points for that at least. Nick Norman-Smith, Aspen, phenomenal business, phenomenal growth story. What an astounding 10 years they've had. Are the next 10 years compelling enough, however, for you to put your money into them?
No, history has proved that, these businesses, if you look at the statistics of businesses being able to grow, they do generally revert to the mean. And yes, this isn't an average company. It's an amazing company run by an incredible person. But the reality is, on a risk-reward basis, it's a probabilities game investing, and the probability of doing well on the share price that's priced like this is not very good. We've seen it with so many. Johnson & Johnson is a fantastic company. For many years, it was priced way too expensive for the reality of its growth prospects, and you did pretty poorly. That went out of favor a number of years ago, and it gave you the opportunity. So I certainly hope that there'll come a time when Aspen will stumble and give us the opportunity to buy into a great business like this. But at these kind of levels, any little bit of disappointment or perhaps negative global conditions that management can do nothing about could seriously hurt the share price.
No, why is he wrong?
The reason is because we've seen almost the bottom, the worst, in 2014, where basically their margins dipped because of a number of reasons. In the sub-Saharan Africa, we've seen our currency losing 24%, of its value against the US dollar, and as a result, the cost went out of control. Do we see the rand weakening further? I think over the next 3 years, I see the rand strengthening rather than weakening. Then in Australia, they are exiting, some of the products that they bought, from GSK and also Mac, And then in Latin America, they had a delay, in the lead-up times, to approving some of the licenses to operate there. Those stumbling blocks have basically disappeared. And, from here going forwards,
Compelling argument, but just too rich for your blood.
We've had 6 or 7 years. I would say the bottom was in 2008. We've had 6 or 7 years of government stimulus and global economic recovery. I don't know exactly where we are in the cycle, but I'd say we're closer to the top than the bottom in terms of prosperity and things going well.
Euthanized the drug company. It's euthanized, not shot down, euthanized, because it's a drugs company. That's what we would do with it. You're shooting it down. Aspen, shot down. That's a title for a movie there somewhere as well, I guess. We can make a documentary of Neo's stock pick. Okay, let's go to you, Nick Norman-Smith, for your final pick from Lentus Asset Management this evening. Here's an interesting one. We've seen Tesco. What a shambles at Tesco. Overstatement of profits. It's been absolutely horrible. Investigators are going in there. Where does the current chief executive of Pick n Pay come from? Oh, yes, he comes from Tesco. But that's not the reason why you're shorting Pick n Pay. In 30 seconds, tell me why you don't like it.
This is it's a business with a great history, but it underinvested in capacity and infrastructure over a number of years, which caused it to sort of overstate profits legally, and it's paying for it now. Now the business is priced, with all the negativity, one would think this is a great value stock, but it's priced for a turnaround. It's priced 36 odd times trailing earnings. Even if they got their earnings doubled back to where their peak ever was, it's still trading at over 20 times earnings. So I just think it's priced for a turnaround. Maybe they'll turn it around, but
it hasn't happened yet. And you stole time. -2 points for Nick Norman-Smith. Pick n Pay, we've been promised to turn around. We've been promised to turn around. It hasn't yet come. You go into a Pick n Pay store, you still greet it like this at the till. They've spent millions on training. They've spent millions on improving the customer experience.
And cutting costs.
And people still tell us that it's a lousy shopping experience.
Yeah, and cutting costs, and the thing is that you cannot, grow the business by perpetually cutting costs. And if you look at, the retail environment in South Africa, they've been consistently losing market share, at the top end of the market, to LSM 8 to 10, people like you, they've been losing market share, to Hoolies as well as Checkers. And then at the bottom, to Spar. And then at the bottom end to ShopRite. And I don't see them, clawing back, some of that market share, and also, maybe growing their margins. Historically, they've operated at margins in the region of about 4.6. At the moment, they are hovering around 2.2%, and I don't see that improving.
Yeah, my local Checkers is awesome, and I can see why there's been a big switch and why people have made that change. And Pick n Pay is struggling to catch up there.
In a rational market, what would happen is they do have great infrastructure and a decent brand. Someone would come in, buy out the company, clean everything out and fix it up. But you can't, because there's a pyramid control structure in Pick n Pay. So it's unfortunately controlled by a family.
But doesn't that support the share price?
Well, maybe at the end of the day, share prices are driven by underlying earnings, and Pick n Pay is not going in the right
He's shorting it. You've got to accept the short.
I'm accepting it.
Okay, there we go. You've accepted 2 of his, and he's accepted 1 of yours.
I'm rational.
What a guy. He's not emotional. He doesn't care about winning or losing. He just wants to do the right thing. Well, these guys are gunning for 3 points each. Rational or emotional, whatever it be, a tweet or a retweet, we'll take it as long as you vote, and we'll be counting those votes until Sunday midnight. These guys do need your votes. We need to get Neo off the bottom of the league because he's such a nice guy. People think, oh, shame, let's vote for him. Or Nick Norman-Smith. Do you just want to see Gary? Do you want to see Gary Boyson cry? I do. So let's see Nick Norman-Smith with 3 points in that particular scenario. Use one of their hashtags and do that. Nick Norman-Smith from Lentus Asset Management. Long on IBM. Neo doesn't like IBM. He shot it down, but he accepted the shorts on both Massmart and Pick n Pay. Tough to argue against in the current environment. Kgantsi from Nedbank Private Wealth went long on Exxaro, shot down on that one, but his short on Assore was accepted. And of course, the Aspen pitch, going long on Aspen, Nick Norman-Smith says it'll give you a headache before it makes you rich. That'll be the end of the show for this evening. Thank you for watching. Do catch us again right here on CNBC Africa next time on Share Shootout League. It's 8:30 for match day 25 next Tuesday. Loads of fabulous scraps and bare knuckle fights before we crown a winner of the most unrelenting, most vicious, most backbiting, nasty when you've got Neo involved stock picking show on television. Till next week, do stay cunning. Good night.